Hello everybody and welcome to the midweek market update from Smack the Markets for the 18th of December. So we've already had a Santa Claus rally in the markets, pushing US equity markets up to all-time highs yet again this week. So what's left for the markets in the last remaining trading days in the run-up to Christmas? Well, I think one issue to keep a close eye on would be the development of Mr. Trump's impeachment inquiry. That's got the ability to have an effect on market sentiment across the world, and also we've got a crucial vote on that very issue in the US later on today. So I think that's one to keep a very sort of close eye on. So let's take a look at a few markets here that we're keeping a close eye on going into the second half of the week, and the markets that we discussed on Monday. So if we come and have a look at the Dow here, first of all, the Dow futures contract early trade this week managed to push on up to all-time highs again and reach again a new high for the market. Since then, the markets have been sort of fairly sideways, as we can see, sort of contained within a bit of a range here. We're still seeing higher lows forming in the market though, and as long as the market is continuing to keep this structure of this trend, our bias here is still to the long side. We'll still be looking at intraday opportunities trading this market for the long side. Now, again, the same levels are the decision point levels for me that I discussed on Monday, which is this 28,160 level. If the market sort of breaks underneath here significantly, then I think we could see a move down to 28,000 sort of fairly swiftly. And as long as the market's above this level, we'll still be looking at the long opportunities here. Now, on Monday, we discussed oil here, and we were looking at oil. Well, if we remember from last week, we were looking at long opportunities on oil up to that $60 level. And since then, the market has rallied up to 60. Last week, it achieved that. This week, we were looking for opportunities above 60 and for a continuation of the trend. Now, last night, we managed to capture some of this move here and again take advantage of the market moving higher. Now the market is retracing back into this sort of fair value zone. It's quite extended up here. It had a very fast move back into the moving averages here, back into sort of fair value zone. So again, looking for opportunities again from a long perspective once we start to see evidence of this market finding support. So as long as it's above 60, our bias is still to the long side on the oil market. Again, if we come up to the higher time frames, you can see that there's a bit of support and resistance around that 61 area. Above that, there's not really an awful lot in the way to resist price continuing its trend higher. Now, also on Monday, we were looking at opportunities here and our preference was Kiwi yen long. If you remember, on this market, we were already positioned on Kiwi yen by the time we recorded the video. Again, we took some nice advantage of this move higher here. Since then, the market has rolled over, and you can see that the trend on the 4-hour time frame has now changed. So now this is now focused on a short move here, and we've seen quite a bit of weakness coming into the Kiwi over the past couple of trading sessions. So Kiwi yen is one that we're sort of leaving at the moment. There is a opportunity here that we're keeping a close eye on Kiwi CAD if the market continues, if the Kiwi continues to weaken. Now, if we take a look at this on the weekly chart, you can see that the market's come back up into this level. It's sort of quite a key support level, which is now becoming resistance. Price has managed to break above it, but not really holding above that price level at the moment, and the market's now underneath it as the market's sort of selling off. So if we come down to the 4-hour time frame, you can see that the 4-hour time frame, as indeed with a lot of these Kiwi markets, are now sort of rolling over. We've got a bit of a structure level through here that the market's sort of sitting around at the moment. Below this level gives us that move down to, or that next sort of trading window down to around that 86 price point, and below that brings it down to the 85.50, which is a much stronger key decision point level. So our preference here is if we get a continued sort of break underneath this level, we'll be looking at opportunities to trade this market down to 86 and then down to the 85 sort of 50 price point. There's a few markets there that we're keeping a close eye on for trading opportunities going into the second half of this week. We are running a trading bootcamp, a full trading education program to learn to trade the methods that we use to trade the markets. And if you're interested in this, you can pop along to the Blackwell Global website, come along to the education tab, and then come to the trading bootcamp. This will bring you to this this page. You can find out more about the details here of the program and the sessions here. You just click on one of these links and you'll be able to reserve your seat. So the trading bootcamp starts on the 13th of January. It's a 4-part program. As I say, we teach you the methods that we use to trade the markets through this program. So that's what we're looking at going into the second half of this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.